There's going to be Motilal Oswal conference. We have Gautam Duggad, head of research, and Sachin Shahane, head of sales, now joining us. Gentlemen, good morning. First up, of course, all the best with this global investor conference. Gautam, the mood must be really good, right? You must be expecting perhaps one of your best conferences. Tell us, what's your view now?
Hi, Anuj. Good morning. Yes, the mood is very buoyant. The fact that markets are closing on many milestones in such a short period of time, and the buoyancy in the primary market, mid caps, small caps, all of that is building up into a very strong crescendo. So for our conference also, we have the highest participation this time. This is our 17th annual global conference. We have about 161 companies, which account for 60% of India's market cap. And the number of clients or investors who are participating are also at all-time high, almost 1,100 registrations. And we still have 7 more days to go before one-on-one meetings begin a week after later. And the interesting thing is, even from corporate point of view, there is a wide representation as usual across sectors, with almost 75% representation at CXO level for the conference. So clearly the mood is very sanguine, sentiments are upbeat. And more importantly, this is also driven by underlying strong corporate earnings performance, benign liquidity, and the assurance that interest rates are not going to go up in a hurry. So all of that put together has acted as a confluence of factors. And we are expecting a very strong next 2 weeks at our conference. First week of 18 CEO tracks, which again, represent diverse spectrum of listed as well as unlisted segments. And then after that, we have our traditional one-on-one meetings from the week after the next week.
Okay, Gautam, hi, good morning. Looks like a very exciting next few days, and I mean, lots to learn, I'm sure. We're awaiting, more details from you. But let me also invite Sachin Shahane of Motilal Oswal into this conversation. And I do want to ask you all about the big deal that has just taken place, in the life insurance space, where HDFC Life has acquired Exide Life. Sachin, welcome to the show. Your thoughts on this entire insurance sector, because it's really started booming in the last few months, and now there's a big consolidation that's taking place as well. Do you think this is just the start of an upcycle, or you think most of the news has already played out?
So good morning, Sonia. And yes, indeed, very exciting times ahead, both in our conference as well as in the insurance space. I think, in fact, we were discussing in the morning itself that it's been a long time that we haven't seen something major, some major event or consolidation in the insurance space. And I think this is just we are seeing. I think the whole insurance space and sector, it still has very long miles to go in terms of the fact that the underpenetration in the countries is still extremely low on this space. So my sense is this is just a tip of the iceberg, and I think we will see a lot more action happening in insurance space, and we are extremely positive. We have a very strong belief that most of the companies in this sector will show strong growth, both in
I think we are having slight yeah, I think there's some issue with your video, so we'll do one thing. We'll come to you in a bit, but I wanted Gautam's view on this, because I know, Gautam, you've tracked this sort of sector for a very long time. HDFC Life is clearly paying top dollar for Exide, right? And you're seeing a little bit of pressure on the stock today as well. But do you think this is not a 1 year, 2 year story? I mean, is this a longer term story? And how does one approach it from an investor standpoint?
Of course, Sonia, so look, what is happening in insurance is you're seeing onset of consolidation. And this consolidation we have witnessed in other BFSI segments in the past. It augurs very well for HDFC Life, because they're getting a hand on 40,000 agent strength of Exide. Of course, they have to pay some premium for that. They have, I think, paid about 2.5 times trailing EV to embedded value, or price to embedded value, which is almost just about 20% discount to well-established and strong franchises like SBI Life. So I think from a HDFC Life point of view, they're getting an incremental addition into their agency channel. From a sector point of view, this is a very good consolidation because there are 23 private life insurers and the space is a little bit fragmented. So consolidation is quite good for this space. And yeah, from a slightly longer term point of view, I think the penetration levels in the life insurance space are very low in India. So this is a very long-term structural story where you can allocate some part of your investment portfolio towards life insurance sector and sit tight on it, because this is not a 1 year or a 2 year story. This is a story which can run for a decade.
Gautam, good morning. I think the problem is that a lot of the newer and younger investors who are pretty happy taking on risk and are maybe even trading things like crypto, they end up getting a better advantage of the bull run, right? Because they don't have anything holding them back. Whereas prudent investors or old-time investors who've seen long bear markets, maybe they keep being a little questionable about the rally. So how do you break that mental block, A? And basically, how do you approach the market now? Which is the one sector where perhaps you can really chase growth? How do you tame this bull?
Sure. So Surbhi, excellent point you made. But the fact is, market is made up of many people. You have short-term oriented people, you have long-term oriented people, day traders, market makers, and that's the beauty of our markets. The point is, at some point of time, when you are in a bull market, which is unstoppable, sometimes people tend to lose sight of the risk. And risks do visit. We have seen in last 20 years multiple times in the cycles that when things go to an extreme stretch level, risk does make a sort of a comeback. So there is no denying the fact that at some point of time, the over-exuberance may get corrected, given that the fundamentals tend to catch up. And that is what has happened in the last 10 years. I mean, before 2021, if you just see one statistics, FY10 to FY20 Nifty has given you 8% CAGR returns. And corporate earnings in that 10-year period has also compounded at about 6.5%. So the market has this, excellent habit of correcting, euphoria and this, pessimism at extreme level whenever it happens. The good thing is the last 1.5 years, we have seen a significant pickup in corporate earnings after almost a decade of stagnation. And as the quarter that has just gone by has shown, even FY22 looks like a very strong year. Now, given that you've seen very strong returns in short period of time, at some point of time, the earnings will have to catch up with the market. And that is pretty fair because the run-up in the valuations, the run-up in the market, if it is not accompanied by the run-up in the corporate earnings, obviously the two has to find an equilibrium over a long period of time. But at the moment, things are looking extremely strong. To answer your second question on sectors, as I've been saying in the past also, wherever we had a discussion, banking and financials to me at today's juncture look extremely well poised because this sector is large component of the Nifty at about 38%. And their earnings have been solid despite all the challenges that we have seen in the last 18 months. Next year also, we are predicting very strong earnings in the large cap financials. And this sector has underperformed over the last 18 months. So there is a room for this sector to catch up on and correct its underperformance. The other two sectors that we have been bullish on for some time now is IT and consumer, out of which IT has run up a whole lot. So there can be some breather there. But the next 3 year story on IT backed by digital transformation look extremely solid. And then consumer, which is an evergreen story in India, which has lagged the last 12, 13 months, but now it is catching up the way stocks like Lever, Titan, Britannia have run up. So I think these are the three big sectors, mainstream sectors, where the earnings outlook is strong. And we do expect strong performance in the near to long term.
You spoke about IT and euphoria. Just look at the euphoria in L&T Tech Services. Rima was telling us about the analyst meet. That's up 6%. By the way, Exide is now at low point of the day, and that's the warning point I was making, that if we buy 12-13% higher on top of the rally that's already happened, then intraday there could be some profit taking, and from 13% the gains are down to about 8.5%. So it's 5% slip that you've seen in Exide stock from the high point of the day. But the stock that's really batting for the bulls is Reliance. Sachin, I wanted your thoughts on Reliance, how it's moved up of late. What would be the house view here?
So we are positive on the name on this. I think largely their initiatives and the new mobile smartphones which they are introducing in the market, I think that is going to drive further subscriber addition. And as we know, the consolidation which is happening in this entire sector.
Okay, I think we are having some problem. Sachin, no, Sachin, I think we're having some issues with your audio. We'll sort that out. Gautam, let me throw this question to you as well. On Reliance, how would you approach it now? It's gone through some underperformance, but the last 1 month has been very strong.
Yeah, Anuj, I think you have to approach Reliance with a mindset of three different stocks. You have retail, you have telecom, and you have the traditional oil and gas business. Out of which, in telecom, we have seen some developments in the competition over the last 10 or 12 days. And peers like Bharti Airtel have run up. So some of it is also to do with that fact. Second, the competitive space in telecom is easing up a bit, given the issues is one of the top three players. And then you have expectations of continued strong performance in retail and JioMart, which is now taking a big huge step, because in the last 1.5 year, JioMart has been expanding its presence in different cities, and now you also have the added catalyst, of course, the timing of which you cannot predict, but the whole expectation and speculation around the Aramco deal. So those are combination of factors, and then the fact remains, as you rightly pointed out, that it has been underperforming post its highs in September 20. So maybe some amount of that catching up is happening. In fact, that is what we have seen in some of the other stocks also, Anuj. If you look at the last 1.5 months of the markets, the stocks which had not participated in the last 12 months, names like Hindustan Lever, names like Bharti, Reliance, they are now taking the markets higher. And this is what we always see in bull markets. Different set of stocks come and take the markets higher, while the other stocks catch their breathing space.
Okay, Gautam, I know we have discussed at length this entire mid-cap IT space, but really the stock on fire right now is L&T Tech, as Anuj was just pointing out a while back. And, this revenue guidance being maintained at 15 to 17% for FY22, it's remarkable, right? At a time when the entire world is going through so many challenges. And look at the stock is just flying away. At this point, is the risk reward still favorable in mid-cap IT, the Mindtrees, Persistence, L&T Techs of the world?
So, Sonia, we are extremely positive on the IT space. This has the highest overweight in our model portfolio of about 350 basis points. And incidentally, L&T Technology happens to be a part of our IT portfolio as well in the model portfolio. Of course, when we added it, it was a mid-cap a year back. Now it is no longer a mid-cap. Yes, I agree with your point that mid-cap IT valuations are not looking lucrative anymore. And our preference relatively in the IT is in the large cap space, which is your Infosys, SCL Tech and TCS in that order. If I have to choose one or two mid-cap stocks, L&T Technology being already part of the model portfolio, outside of that, I may choose Emphasis or a Zensar. But the broader space, we are very positive. We do think that this whole shift towards digital transformation, cloud, and the size of order book and the expected order pipeline, all of this point towards a very strong next 2 years for IT. So while valuations are not allowing you too much of a legroom, but we have seen in the market that valuations alone do not dictate the stock performance. That is what has been reiterated in the last 18 months, again, across variety of sectors. So I will not remove even 10 bips of position from IT model portfolio that we have.
Okay, that's a full thumbs up to IT. Let me try a final question with Sachin. Sachin, Gautam mentioned two sectors. He likes IT and he likes consumer. You marry the two, you get consumer tech, which is the hottest thing in town these days. So I want to get your feedback on what your institutional clients say. If for every incremental 100 rupee that is to be put in the market, are they happy paying top dollar valuation for a lot of these high profile IPOs that are coming in? Or is the comfort still more for the listed space where you have proven track record?
So I think, Surbhi, my sense is we are seeing very strong and offshore funds into consumer tech space. One of the recent examples was the IPO of Zomato. And it would be interesting to note there that, a lot of allocation came in from the global funds and not necessarily from their India dedicated portfolios, which speaks a lot about how, one, on the size, because obviously global funds are far larger in terms of their size and they can cut big checks. So that was a very interesting trend I observed. And second is, I think on a bottom-up basis, a lot of these FIIs, sovereign funds, and global long-onlys are scanning opportunities where they feel there is a very strong business model, a very strong moat in the business, irrespective of whether right now there may not be very immediate short-term earnings, numbers coming in, but over the next 3 to 5 years, they expect, very strong earnings growth. So FIs are indeed very, very closely watching this space and seeing any opportunity, they are willing.
Well, third time unlucky. Thanks a lot for joining us, though. Both of you, hope you have a great conference. Sachin and Gautam, thanks for being with us on CNBC TV18. That's Motilal Oswal. By the way, the market is holding up just fine. This